Good morning. Welcome to Trading Calls right here on ET Now. Disappointing session yesterday, so not much changed from day before to yesterday. So 59, 50 thereabouts, that's where we've been tottering around.
Morning, Asha. So what looked like a picture-perfect market 2 weeks ago, fatigue and signs of reversal have kicked in. Benchmark indices are now looking tired. Momentum is tepid. We are massively underperforming global markets. The demand-supply equation has changed. So if policy reforms were responsible for re-rating of this market, suddenly government paper is clearly responsible for capping the upside once again.
And globally important data points to watch out for today.
Today is a big day, but last night US equities have not gone anywhere. The tone of data flow is still positive and constructive. If I map the price action, it is important to mark that money managers clearly are not bothered about the EU debt crisis or the political problems which are happening in Spain and Italy. Having said that, the big global story is yen. It is the weakness in yen which is fueling price action and volume action in Asian markets. Yes, Asian markets are looking slightly tepid. They are looking slightly rusty today. But in the near term, there is every reason to believe that Bank of Japan will follow a loose monetary policy. There will be weakness in yen. Weakness in yen will only fuel more yen carry trade. It will benefit a company like Hero MotoCorp and Maruti, but in the near term, that is a clear indication of risk on trade.
Okay, for our markets as well, like Nikun said, getting a little fatigued, but lots of data points to watch out for. Cipla, which has beaten street estimates, watch out for that month. Tech Mahindra as well is something that the street would be eyeing out for in terms of an earnings reactions. Godrej Industries, JK Lakshmi Cement, disappointing performance coming in after market hours yesterday. Manappuram Finance as well, wherein the net profit has actually halved this time. So those are some of the data points to look out for. Meantime, the IMF has quoted that India should be looking at, should hold rates till inflation actually stabilizes. So that is some of the commentary coming in from experts this morning. Lots to chat about. Here's the lineup on the show today. We will chat market fundamentals with Vikas Khemani from Edelweiss, Nikhil Vora from IDFC, Pankaj Pandey from ICICI Direct. Ashwini Gujral, Sandeep Pagle as well as Deepak Moni would join in to talk about their fundamental take, get your trading ideas as well. But on to the US stocks, and they ended mostly flat on Wednesday as transportation and tech shares lost ground. Stocks are consolidating their gains after surging since the start of the year. On closing bell, the Dow was up just about 7 points. The S&P 500 ended flat, and the Nasdaq Composite as well was lower just a smidge. The Dow closed about 14,000 though on Friday for the first time since December 2007.
Look at Asian markets, and let me just tell you what's happening there. Now, Japanese Nikkei yesterday appreciated by a good solid 3% plus. But today, Asian markets are consolidating, and the reason why Asian markets are consolidating is because of routine profit booking. In terms of absolute price action, Japan is down by about 87 points. Hong Kong has taken a knockoff for about 26 points. Shanghai Composite is just about holding on. Taiwan is shut today, and SGX is not looking all that charged up. Just to give you some numbers, for this calendar year, Indian markets have not gone anywhere, but other Asian markets for sure are outperforming Indian markets, and that is something which I'm sure will be a bigger return going forward. So for money managers who manage regional money, this degree of underperformance surely will not get unnoticed. The story for 2012 was China was underperforming, Brazil was under pressure, and money was moving to India. But for this year, the story is looking slightly different. So far, early trends are suggesting that Indian markets are correcting. The demand-supply equation has changed. In the near term, if you're a trader, there are no fundamental triggers which are suggesting that Indian markets, they want to go higher. So even though news flow has not changed, it's easy to understand that in the near term, benchmark indices have hit some kind of a stumbling block. What's happening in the futures and the options market? For that, let's go to Darshan. Hi, Darshan.
Well, Nikunj, it really looks weak as far as our markets are concerned. 59.72 is where we ended. pretty much, there was profit booking happening, close to almost 0.6 lakh shares were shared in open interest. The range seems to be 5,700 to 6,100 because yesterday a lot of call writing happened at higher levels. So if you're talking about individually calls, 5,900, 6,000, right up to 6,200. In fact, 6,100, 6,200 saw the maximum addition of open interest on the call side. On the put side, positions are now being taken at lower levels. So a lot of positions were taken at levels of 5,700. Yesterday, almost 7 lakh shares were added in open interest, but 5,800, 5,900, the action was rather muted. On the stock side, yes, on the Nifty is not happening anything, but on the stock side, close to almost 4.7 crore shares were added in open interest, indicating that there is a lot of activity happening there. In the FNO band, 3 stocks, so Welspun Corp, Suzlon, as well as Punj Lloyd are the 3 counters. Yesterday, individually, you saw a lot of movement that came in. Jubilant Food saw open interest up 33%, fresh buying after 2 days of heavy selling. The other one was PFC, which saw open interest up 33%, fresh buying on the entire coal pool pricing. So people anticipated that to be the big beneficiary. JP Associates of fresh shorts, open interest up almost 7%, and this one has seen a one-way slide. NTPC open interest up 40%, fresh shorts were seen, given the fact that, the OFS will happen today at a level of 145, and the last one was sale, open interest up 7%, fresh shorts were seen on the anticipation of poor results. What we have to watch out today, obviously Cipla will react to the numbers not all that good. Tech Mahindra will react to the numbers, and couple of big heavyweights, ACC, Ambuja will come out with numbers, and among the mid-cap counters like an Aurobindo Pharma will report numbers. So it will be a very earning heavy day today.
Yes, indeed, Darshan. Thanks as always for those details. But the story today is going to be in NTPC. And do you get the sense that it could be as big a success as Oil India?
It will sail through, but bear in mind the size is also different. Oil India was about 3,000 crore. This is about 12,000 crore. So the stakes are much higher. Now for NMDC, the key trigger point was attractive valuations. For Oil India, the important differentiator was that hope that subsidy reform will kick in. Now for NTPC, there are no large triggers in the horizon, but valuations are very attractive. Based on FY14 estimates, NTPC is just about trading at one-time book. You always measure the value of a utility company not on EPS, but on the kind of assets they have and what is the book price or what is the book value. So from a valuation matrix, NTPC I think is looking very attractive. But the only irritant what I feel is there for NTPC is the fact that NTPC had hit the primary market about 2.5 years ago at about 200 rupees per share. That time markets of the Sensex was at about 10,000. Now the Sensex is at 20,000, but NTPC is still languishing at 155. So for a first time buyer, this is a good opportunity. But for someone who participated in the 2009, follow-up offering, there is a bit of a bitter aftertaste. So that to my mind is an irritant. And the government issuance honestly is the big problem. In the month of Jan, foreign institutional investors have pumped in about 21,000 crore. 6,000 crore got mobilized by NMDC, 3,000 crore got mobilized by Oil India, 12,000 crore will be mobilized by NTPC. So we are looking at about $3.5 to $4 billion of fresh paper, government paper, which will hit market before budget. So because of government paper and because of domestic institutional selling, the demand-supply equation for sure has changed. So if liquidity was a big plank on which Indian markets rallied in the year 2012, that plank now is looking slightly shaky. Domestic investors are not there since mid-cap stocks have done precious little in last 10-15 days. Local crowd is also not very excited. Nifty futures, the premium has contracted. That just tells you that directionally the markets are not positioning themselves for a big trade. So in the near term, I think the fundamental triggers and the technical triggers are not there. The fundamental trigger now is budget, which is a good 3 weeks ago. The earning boost is behind us. So I just get a sense that in the near term, we've hit a wall. The trend has not changed, but there is no momentum really, no visible momentum on the upside.